else says I'm doing. I'm not saying I'm the only one that can be profitable. That my students are only.
All right. Welcome back, guys.
I'm
Good
the only one
evening.
that gets the heart of why price.
Sorry. Good afternoon.
But you can be profitable with flipping.
So, I have brought you back with the weekly market review. Sorry, this has to come late. We are some. I don't know, but it has to come late. But I think you will still need it for Monday, Tuesday, Wednesday, Thursday, and Friday price delivery. If you work with the weekly profile and you work with a weekly mark contract. So this video is dedicated for the weekly price delivery for the first week, which begins on 31st and end on 6th of April 2024, which is the first week of April. Before I dive into looking at the weekly profile, there is something I would like for you guys to see on the monthly. So I will change my price action to monthly, right? I don't normally do this, but I think it is very important that we look at this critically, because if we are having an indecisive price delivery between the lower time frame and the higher time frame, sometimes it can be more confusing. But we can definitely read what we have and also set a condition that will be ideal for us to be it to trade with it. That is the condition that will either make us to take any decision. So one of the greatest things I want to show you guys on the monthly contract is this consequent encroachment of this monthly week of this previous month, which is the month of February, consequent encroachment of the week, because we can see that the month of February week higher taking buy side liquidity, and or which is the previous month high, then rally lower, closing below closing inside that range. So the new month that just opened, which the month of April, we have seen a really we have seen that price has taken the February low, right? And if we take sell side, where are we going to? The buy side. But now we want to look at the sentiment. Now, what they mean by sentiment, or how will I, which other language can I use now to explain these terms for the, if you don't understand. But let me say higher time frame perspective and the market structure. But I will rather, I think sentiment actually makes more sense. Now, if you look at the whole sentiment, we can clearly see that we have been bearish from here up that created this low. Now we are looking for lower prices according to the monthly candle, which is the monthly market structure. But now, for this bearishness to be invalid, we need to see market trade above the monthly candle consequent encroachment, which is the previous day candle, which is this blue line, right? And also, since we haven't taken this major liquidity, which is sell side liquidity, which is a swing low, it is also important that we look at that area critically. If we did not go above this line, then there is a higher probability that we're going to turn down and price lower to take this low. And also, if we go on the XY, we will see that the XY have already taken that swing high, all right, because it's a swing low here and it's a swing high there, which is what has shown what I am trying to show you guys here critically before we go to our weekly. We have taken that high, and if this is a very great smart money divergence, because if you look at the DX right now, you can barely see confirm that okay, this is a bullish a bearish scenario coming, that is incoming, right? But see, we also have the consequent encroachment here on the XY. So if we don't go below this consequent encroachment, then we are still likely to go higher. And also, Haven't we taken the major buy side liquidity that form a divergence between the DXY and euro? Is also a very great significant that if this is a liquidity sweep and we are reversing, then DXY will have to be going, sorry, then euro will have to be going higher, while the SY will have to come lower. And if the SY is coming lower, then we'll be seeking what? Sell side delivery, and euro will be seeking buy side delivery. Now all this joined together is is what is at the condition that is going to set us for any decision we are going to partake in going forward. I hope this has a great explanation for you guys going forward. So let's not waste the time, as we have only 20 minutes for every videos that we have to do. Now let's go on the weekly time frame, and this blue line up here indicates the monthly candle wick consequent encroachment. So as long as we stay below it, we can still expect bearish delivery. But now, if and only if the SMT divergence that occur is not going to be effective going forward. But because if it's going to be effective on you on DXY, that definitely disqualify any form of what sell side delivery on euro. Wow, my battery is low. Okay, let's see if this battery get us to the end of this video. If it does not, then there is a very high chance that I will have to recreate this video. I have 10% remaining and there's no light. So let me not waste our time. The Euro US dollar weekly contract for the first week of April 2024 delivered as an up close candle after forming an SMT divergence with the DXY and showing uh and showing since okay and showing a sign. I don't know what I wrote here, but it's I meant sign, not since. Showing sign of what? A possible reversal. That is, we are going to have a what? A bullish reversal. Now the week price delivery was a price rally into the weekly bearish order block and week into the weekly fair value gap or CB, which is the area of interest we anticipated for the previous video, which is the previous weekly video, and it leads to the previous delivery and it leads to the price delivery, sorry, I mean it leads to the price delivery lower and a rejection from the daily bullish order block that ends the weekly close on a what? On a bullish market that close exactly at the what? The weekly bullish or bearish order block opening price. Now if euro find its way, sorry, let me explain that statement. I am talking about the how price delivered on this week that we are just explaining, and what I mean is that we delivered higher, we the price opened rally higher into, first of all we rally lower taking sell side, then rally higher into the weekly buy side liquidity and into the weekly bearish order block, and also weak, that is the body of the candle did not price above the bearish order block, but we weak into the fair value gap and reject from there, rally lower, then reject from a lower time frame what? Bullish order block, and close on the what? Exactly at the bearish order block. So if euro find its way higher and price above the monthly candle wick consequent encroachment, that will signify a complete bullish price delivery, which also an indication that the SMT divergence is an effective one, and also price is willing price will now be trading on a new tight range. Right, that is, if this whole thing disqualified and the price market did not respect the consequent encroachment of the monthly candle, and also we did not respect this weekly bearish order block, that is an indication that this we are coming for this buy side liquidity, and also the SMT divergence is an effective one, and we are on a new tight range, which is the range between this price and this price, no longer this but the range between here and here, which is a new tight range. All right. So if euro respect the weekly bearish, now the second scenario, that is the statement I just ended is for a first possible scenario that could happen. But now the second scenario is that if euro respect the weekly bearish order block and also did not trade above the monthly uh, previous candle consequent encroachment, which is the February candle consequent encroachment, that will still set the ideal bearish price action that might not be fast paced. Now, listen clearly. If we did not go above this consequent encroachment and we stay, and also we respect this bearish order block, that will leads to the continuation of what lower price delivery, and also that will set that price delivery will not be fast paced, meaning that it will not move faster, it will be slow and choppy. All right. I don't know, we might have a significant news that might lead to some sort of what price run, but quote and like we're going to refer back to this video, if we respect that those areas, then that price move lower will be very slow and choppy. So you have that at the back of your mind, so when you are engaging with price next week, you should be very very conscious. Now, having the two most specific price delivery, it is important not to lose track of the higher time frame when reacting with the lower time frame, just like I have explained. Now the weekly profile, for us to go on the weekly profile, I will have to go to the XY first. So we explain the you know the possible scenario between uh the DXY and euro. Now on the XY we have sweep buy side liquidity and we have rally lower, and also now look where it gets tricky. Also we have a fair value gap and a bullish order block. Now we have tapped into the fair value gap and treat it as an institutional order flow entry drill, but we haven't react on the bullish order block. Now if price open and we rally lower and tap on the bullish order block, that could also set a leg higher for in price, set the a higher price delivery. And if that is not the case, then we are looking for what bearish move, and for that to be confirmed, we need to see the market trade below what the monthly candle what consequent encroachment, which is what around this price, around this below the weekly fair value gap low. So that is an ideal scenario that we want to have our eyes on. And if we are going to be bullish, the price move will be slow and choppy, because we there is no buy side liquidity that is sweet for the market to seek for, because we have already taken this one. So it will be what slow, choppy, and not efficiently distributed. So it should just be some kind of what liquidity run until we get to that higher price. So that is just what I have to explain for the XY. So I'll be going to the euro to explain the intraday price or the weekly profile. So we call it a day, or we call it a week. So we now set our eyes on our mindset on the next week that has to come up. Now the weekly profile is an obvious Tuesday as the low of the week that formed the smart SMT divergence with the XY, and also did not form a lower low and create the momentum that lead to a change in price delivery. Now if you look clearly, if you go to your chart, Tuesday of last week formed the low of the week, and it creates the momentum that lead to a change in the state of price delivery, which makes the Monday candle to become a bullish daily candle, and that deliver what price back into the specified range. And on the daily time frame, we can see the body